Tuesday, July 7th, 5:27 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. This is an update on a trade. Took a trade, swing trade. That means more than one day. Using options. It's on the NASDAQ-100. Yep. I have two choices I could make. I could short the stock. I could buy the stock. Okay, that's the stock equity. The other is with options. Options, I have more than two choices. I could buy the calls. I could buy the puts. I could sell the puts, sell the calls. That's four. I did advanced option strategy. Yep. Let's go back here now. Look at the chart, the NASDAQ-100 cash index. The key word here is cash index. You can only trade options on the cash index. Far right is the monthly chart. Currently inside candle. We haven't taken out the high or low of the prior month, which happened to be the high of last month, all-time high. The weekly chart already broke the low. I'll zoom in here. Already broke the low of last week. Last week also happened to be a inside bar. Already broke the low of that, like I said. Lower highs, lower lows. The trend is down. The daily chart. We gapped down from yesterday. That's a gap. Yesterday was that inside candle, that yellow candle. So I'm going to label this. Gap down. There's a gap here that hasn't been filled either yet. Now this cash index is the second most popular stock index besides the S&P 500. Has a stock ETF on it. The stock symbol is QQQ, which I use to take the trade. Let's cue that in. My list is big. There we go. Again, the stock ETF, you could trade the stock ETF as well as trade options on it. Versus the cash index, you can only trade options. So the far right is the daily chart. I need to update that. That should be weekly. Do some house maintenance here. There we go. Yep, so the far right is the weekly. The middle is the daily. And the far left is intraday, 30-minute, 1 day. Yellow down arrow is where I got the trade. I placed the trade. Looks similar to the NASDAQ 100 cash index. So today, like I said, I closed it yesterday. I put it on in the late afternoon. You can look here on the 30-minute chart. These are extended hours, but 30-minute chart, I put it on over here near the close of the day. And this morning, closed it this morning. Nice. For profits. Nice. The option I traded happened to be this strike here. See this yellow horizontal line, 736. Very deep in the money. Well, sorry, out of the money. Because the inverse out of the money. Yep. So long as the stock stayed below that, I was fine. And I had quite a bit of time till it expires. Not till next month. But I took a profit very fast. So nothing wrong with closing it for a nice profit. Yep. Again, 2 days. So when I placed it yesterday, here, and then overnight when I was watching the futures market and the stock ETF declining, yep, gains were being made overnight. This, I'll zoom in here. Pre-market, look at that big fake out, big trading range, bearish pin bar, opened up, regular trading session, sold off. Did a retracement today, filled to continue going higher. Consolidation, barcoding, very weak, very bearish, and a huge sell-off again. That's right, because again, in the morning, I took my position, closed it for profits in cash. Very nice. I want to show you the futures market. Yep, the futures are actually they're already closed. They don't until 6 p.m. But let's look here on the futures market right here. So this is the hourly, the NASDAQ-100 futures market. I want to put it on a 30 minutes. 1 day. There we go. So this will open at 6 p.m., but it's similar to what I just showed you on the cash. The QQQ, stock ETF. Now let's go over the options. Options are derivatives. Not all stocks have options. And the stocks that do have options, most of those options are pricing are terrible. So I have very few stocks on my watch list that have options that I trade. This is one of them. It's outstanding. The pricing is outstanding. Doesn't mean it's always going to stay like that. That's why I check and verify before I take the trade. Yep. So now we're looking at the option chains. Let me close this. So here's all the contracts available currently right now. There's a lot of contracts. Contracts have different expirations. Again, the NASDAQ-100 is the second most popular stock index after the S&P 500. Has the highest. Great liquidity, tight spreads. Yep, so look at all these contracts. So yesterday, when I was hunting reconnaissance on trades, I had this one come up, the NASDAQ-100, and specifically the QQQ stock ETF. In the contract, 31 July, 24 days. So yesterday, when this came up, it was 25 days, but now it's 1 day less. Again, expires in 24 days, calendar days, 31 July. So now we're going down, going to look at all these strikes on the left of the calls and the right of the puts. We're focusing left on the calls. I was bearish. I did advanced strategy using bear call spreads. I collected a credit. I got paid up front. Yep, paid up front. The trade I took paid me $215. I put a working order on to close at 30% as soon as I got filled. And then this morning when it opened, I adjusted it a little greedier. So I moved it up for a little bit higher. And I closed it instead of 30%, I closed that at 33%, I think it was. 33%, yeah. So I closed that at 145. Again, I received a credit, $215. Closed it this morning at $145. My profit was $70 for a 33% return in 2 days. Outstanding. Again, the option doesn't expire till July 31st. A lot of things could go against you. So making 30, let's just round it off, 30%, even though I made more than that. 30% in 2 days is fantastic. Why give myself risk any longer? Again, the probabilities are somewhere a point return against you. Outstanding. So now let's go look at these strikes, the situation, which gave me great insight. So first, we're going down to look at 736. I already have it lighted right here, highlighted. The strike here is 736. Again, the contract's 31 July. On the calls, and the strike 736. So yesterday, see this column that says volume? And see this column that says open interest? Again, this is all the volume that occurred today. Tomorrow it'll be zero and start all over again. And the open interest will change. It's either going to go higher or lower, depending on these volumes today, if they were open and closing. Yep. I need to update this a little bit more. Let's put a 65. And now we're going back to the strike 736. So there's open interest yesterday here. It was much lower. How much lower was it? It was only 218 contracts that were open. Only 218 for the 736 call strike. Yeah. So what was interesting that I saw was, again, in the volume and the trade that went off, because I was looking at the line by line timestamp trades. There was one trade that went off that was 28,212. Yep. Someone did a trade for 28,212 contracts. I was like, wow, holy moly. The open interest was only 218. But someone did a trade for, again, 20,212. So I knew that those are new positions. And when I went to look deeper at it, I saw that they did them. Again, call options, most people that trade options, about 70% more, 70% of people that trade options, majority of them, let's say the novice, they go out and buy call options because they're bullish. They expect the stock to go higher. And then the people that are buying put options, they typically are buying put options because they're bullish and they're looking for the stock to go lower. So advanced option strategy, which I understood, those 28,212 call options they bought, or sorry, traded. The word is traded. They sold those. They shorted them. They were bearish. They were looking for the stock to decline. Wow. Nice. And they received, what was that? 1,300 per contract. I think it was $1,362 per contract. Anyway, it's a huge amount, millions of dollars. Let's just deal with it. A lot of money. Yeah, each contract they received, remember, they were credit. $1,362. So as soon as I saw that go off, I was like, all right, need to look at the chart a little bit more. And then I was leaning more bearish bias. But that being said, I realized what they did also, which you're about to see here. We're going to go to the 730 strike. Here's the 730 strike right here. We're going to look at open interest, which is now 15,418. And the volume today, again, 5,981. The volume, some of it is buying, some of it is opening new positions, some is closing positions, okay? And the open interest tomorrow will be updated. And depending on how many of these are opening or closing positions will determine if this is going to go up or down. So yesterday, the 730 call, it had volume, 14,506 for one trade. The open interest was 2,057. So right away, I saw more volume than open interest. So I already identified what they were doing. Again, the volume here was 28,212. And the volume here was 14,506. So half of it, what they added on was a spread. And then the other spread, again, that was our main strike, 736. But they added, and what they did here was sell more. They sold these call strikes also and collected $1,174 per contract. And then the other one they sold was actually a higher strike, the 740. So the 740 strike here, the open interest yesterday was 2,142. And that trade, they took 15,635. No, it was 14,000 something strikes, contracts. Yeah. So the open interest yesterday was 2,142. And the volume was 15,635. 635. So again, the volume was much higher than the open interest. So again, I knew, and when I was looking at the timestamp, that volume, the 15,635, they sold the call options at the bid. So they sold the 730 calls, 736 calls, and the 740 calls. Extremely bearish. Big money, big will, big money, smart money, speculating the stock was going to go lower. I joined the party near the end of yesterday. Again, showing charts. That's on 3 or 4 other videos because this is the 5th video on this trade. Yep, if you want to see the videos, they're on my Patreon. They're for the highest level Patreon members. Much more detail on how I selected this. This is all after I got out of the trade. Yep. So again, tomorrow, all this volume in the morning would be empty and these would be updated, either plus or minus. That being said, there are a lot of people putting on trades this morning, both sides, puts and calls. And I was selling my positions to them. Yeah, I sold. I say that because, again, the stock could turn around, go higher, and all these people late in the party, or maybe standing outside online that weren't even invited, are buying, and they might be 100% wrong, and maybe the stock will go lower and the puts were like that. So on the let me close this. Show you this now. Here, I'm going to have you see only the 31 July contract, okay? And then multiple strikes I have here. What I have here queued in here. So I narrowed it down to just quantity of 100. We don't need to see people doing one trade or 50 trades. So let's look at the big money ones that do 100 contracts. So today, 10:31 in the morning, the biggest trade for the 730 call, the 31 July contract, 730 call strike was 841 contracts. And that price got filled at $919. I know it says $9.19. Each contract's 100 shares. That's $919 per contract. Here's the spread, the bid and the ask. So since this is white, that typically means it got filled between the bid and the ask. And then that most likely means it got filled at the bid. It's also lower. Yep. So again, what were they doing here? Very likely selling call options, bearish strategy. Again, they need the stock to stay below that strike. Well, if we go down here and look at some other strikes, big ones, the biggest ones. Again, the white means it got filled between the bid and ask, but I want to show you here. Big order, 425. One trade, 425. There's 775. Again, it's all the same contract, 31 July. But this one, $775. Call. The red, they did at the bid. So they received, again, the strike is 775. It's even farther away, higher. I'll show you here. Okay, this is the one I did. The 736. And the one they did again was 770, right? Which is really far away, all the way up here. Sorry, 775, even higher away. So that's why they collect less money. The further the way it is, and those are out of the money, the further out of the money, they're going to collect less money. That's why I collect the bigger money, because I was closer. I was using around like a 30 delta. So this was a 5 delta. Yeah. Wow. They were like 2 standard deviations far away. Yeah. Just show you again. They were selling. They were bearish. They sold calls. What's some other big ones? Look at these 416. Wow, 2 of these. Back to back. back to back. 775. But this is green. Interesting. They were at the ask, so they were buying. Yep. There's a bull and a bear. So obviously there's two trades here. They were buying out of the money. So they're speculating the stock will go higher. Either that or they're doing cover calls. If they have the stock, then they're doing cover calls. Or they could be closing a trade too from another trade. Yep. So advanced strategy, using options. I had plenty of time for this trade to work out. And I didn't have to stay into expiration. I want to show you, again, far right, the QQQ weekly. Lower high, lower low, big red candle. The week's not done until the close of Friday. Gap down this morning. Let's go back to the broad market to show you what's currently going on, and then we'll be done. Smart money, dumb money. Far right, weekly chart. Dow Jones Industrial Average, 30 companies, all-time new high for the week. Higher high, higher low. Weekly chart middle, NASDAQ-100, red, lower low, lower high. Look, it's in a bar coding. It's in a consolidation. Huge red candles. Big wicks. Yep, looks like it's more distribution. Distribution means smart money selling. Far left, S&P 500 cash index. Look at this weekly candle. Little tiny candle. It's only Tuesday. Dodgy candle. Dodgy candle. Dragonfly. Small little bodies. Distribution looks like smart money selling. It's earnings this month. Also, this month is the FOMC meeting. There's a lot going on. Now we'll go to the daily chart. Dow Jones Industrial Average, all-time new high. Closed red, back inside the prior candle. Likely distribution. Likely smart money selling. Tell you, NASDAQ 100 gap down. And the S&P 500, lower low, lower high. Got it? The market looks like smart money selling, dumb money buying. I don't choose to buy at the highs. I shorted at the highs. The bigger trend is bullish market, selling at the highs, sit on hands, waking and buy on retracements. Thank you as always. Spend a little time with me. That's it for the video. Thank you for supporting.